Welcome back to Alberta Primetime. On tonight's Vocal Point, are we creating a treacherous bitumen cliff? And are hard-working Albertans making any progress? Our Monday Money panel is in. Jane Alm is a senior investment advisor with Angus Watt Advisory and National Bank Financial. Shafik Hirani is a director at Investors Group Calgary. And Todd Hirsch, senior economist at ATB Financial. Good evening, everyone.
Good evening.
Hello.
Good evening.
Jane, while our premier pushes our energy industry in the U.S. most recently, the Canadian Centre for Policy Alternatives is out with a report that we're creating a carbon trap, a bitumen cliff, becoming too dependent, basically, on oil sands. What do you think?
Well, I think it comes back to the thing that we've been talking about over the last few months, few years, I think all of my life in Alberta, is that we do need to diversify from oil and gas, because when oil prices are depressed, we need something else that can support the economy. If the whole Canadian economy is based on oil and gas, that just exacerbates the whole system. We need other types of entrepreneurial developments, other types of businesses to sustain us through the times where oil productivity, or oil prices at least, are not in our advantage.
Todd, stop and smell the roses. Should that principle be applied by our economic policy makers in this case?
Well, I guess it should. And I agree with Jane, that we don't want to become too dependent on any one commodity. I think the title of the report, the bitumen cliff, that might be overstating it a bit. It's a bit dramatic. But I think the point is, yeah, we do want to diversify. From a policy perspective, though, I've always called diversification, this is the holy grail for policymakers, because how do you do it? We'd all like to see more diversity, but any policy to diversify the economy, difficult to do.
Shafik, the Centre for Policy Alternatives cites big investment in energy infrastructure that must be paid off, so you get high production that can drive down prices. Also, as our guests have mentioned, less economic diversity and maybe less environmentalism. Do you see a bitumen cliff? And also, what would a fall from that look like in your mind?
I do, and it's really challenging. You know that saying, you live by the sword, you die by the sword? We tend to have the infrastructure for the development of the tar sands and the Athabasca oil sands is very big, and often those investments are funded by state-owned governments, and these governments, in order to get their investment back, they push for sales of the product very quickly, and these sales must be implemented. In order to make the sales, sometimes price goes down to make the sales. So there is a downward pressure on the price of these oil and gas, hence the bitumen cliff. What you can do to offset that is you can, like Jane and Todd were saying, is you can diversify your investments. Too many Albertans are investing only in Alberta, and Canada itself represents 2% of the world. You got to look at your portfolio, and if you're only putting all your money in Albertan investments, you're only accessing a very small fraction of your investments that are available.
Todd, you talked about the trouble with, pull up, let's take a look around here, see how we can diversify. What are, if you can be more specific, what are the dangers of trying to deconstruct a potential bitumen cliff? Layoffs, commodity prices. Can you get more specific as to how policymakers tinkering might impact you and I?
Well, I guess when you look at over the last several generations, in fact, in this province, other periods of time when governments have tried to maybe artificially diversify the economy. You think back in the 70s, and that didn't really work out very well. But when you think about now today, if we do start to see a slowdown because of some bitumen cliff, that's not good, but we are starting from a point of very strong economic strength right now in Alberta. We've got 4.5% unemployment. This province could very easily sustain some unemployment without going to very high levels of unemployment. So I think we're starting from a good point if we do need to see some slowdown.
How about you personally, your income, your household as an Albertan? There's another report out by the City of Edmonton's chief economist, John Rose, suggesting 99% of residents in Edmonton are not making any more money now than they were 30 years ago. And in Calgary, people are actually making even less. Jane, things become more expensive for sure, but this, of course, factors in inflation. If wages aren't keeping up, can investments bridge a gap?
I would caution people to be very careful of trying to overachieve with your investments to, quote, make up for a difference. The higher you strive for a return, the more return you're looking for, the more risk you end up introducing into your portfolio. If something can go up 10%, it might go down 20 or 30%. So you always have to bear in mind that if you're going to reach for that high return, you're going to have to accept a lot more volatility. And there's not a lot of people out there that are prepared to accept the downside. Everybody wants the upside, but nobody wants the downside.
It seems so disheartening and maybe kind of a shock to Albertans, Shafik. We would expect, especially in Calgary where you are, boy, we're so prosperous. How could we possibly be spinning our wheels financially?
Well, you know, we're not. And I think, you know, in addition to that report, yes, our inflation and our income numbers haven't grown too much, but our productivity and our state of life has actually improved significantly. And I think we have to understand, 30 years ago, if you look at the average person retiring 30 years ago versus today, 30 years ago they went to school till they were 18. Today they go to school when they're 22. 30 years ago they retire when they were 65 and they died when they were 75. Today they're retiring when they're 55 and they're dying when they're 90. So we have to redefine risk. Risk is no longer losing your principal. Risk is outliving your money, and people need to be aware of that.
Todd, what do you make of this report, and also just specifically, if our wages are at least keeping close to pace with inflation compared to 30 years ago, is this headline as disheartening as it maybe sounds?
Well, I don't think so. I mean, I'm not challenging John Rose on the numbers. He's a smart guy, and the numbers statistically show that wages haven't been quite keeping pace with inflation. But when you look at that basket of goods and services within the Consumer Price Index, there's a lot of things that actually have been falling in price, and the quality of them has improved. Think of a digital camera. What you would pay now for a digital camera, maybe $100 or $200. $200 30 years ago wouldn't get you much of a camera at all. Certainly nothing like a kind of camera that you would get today. So even though prices maybe have, you know, kept pace with our wage increases, a lot of the things that we consume today, if you're looking at just material things, are actually so much better than they were 30 years ago that I think it's hard to make the case that we're that hard done by.
Yeah, goodness knows we're buying them, and you just cheered everyone up. Next up, what our panelists are watching out for this week and what parents need to know about the Tooth Fairy when the Monday Money Panel returns here on Alberta Primetime.
Hair care services for Jennifer Martin provided by Charisma Hair Fashion.
Welcome back to Alberta Primetime and the Monday Money Panel. Todd, we've talked about Albertans' prosperity compared to 1980. We've talked about a bitumen cliff, perhaps. You're also watching for statistics on investment intentions right now. Why? What will they tell us?
Well, yeah, there's a report coming out Wednesday from Statistics Canada. It only comes out once a year, and it's public and private business investment intentions for 2013. So this is the best guess as to where companies, how much companies will be investing. I'm going to be very curious to see if there is some pullback in investment in Alberta by oil and gas companies. I expect there to be, and I expect there to be some chatter about this. I'm not expecting any sort of end of the world scenario, but I do think we will see a little bit of pullback in investment in Alberta in 2013.
Jane, on your radar this week, sequester talks in the U.S. What are those?
Sequester talks are what actually President Obama suggested back in the fall of 2011 when the U.S. Congress and Senate could not come together on a budget on cutting different spending. So that was supposed to start happening in January, and that got pushed down the road to now March 1st. The cuts will be phased in. One of the largest areas of cuts is defense spending, which obviously, if you follow U.S. politics, you know that Republicans like to keep their defense spending intact. So we're getting more of the same noise and more of the same it's his fault, it's not my fault discussions.
And how will it affect the economy?
And how will it affect the economy? You know, at this point, if they follow their normal course of action, they kick it down the road for another couple months until they try and figure it out one more time.
bank earnings as well?
Bank earnings start on Thursday. We start out with TD, CIBC, Royal Bank. We'll be all watching to see. We know that the banks have all said that their growth of loans, growth of mortgages will probably not be growing at the same pace. They're still going to do just fine, thank you. They're still going to make lots of money, but probably not the same rate of growth on loans. And China seems to be, latest numbers out this morning was that the economy is a little bit slower, which the government there will be very happy about. They were seeing that housing prices were rising too fast again. The one thing about the Bank of China is the government tells them what to do and they stop lending.
Perhaps
so
not great news, though, for energy producers who love to sell to China.
Well, except that they're trying to get more domestic growth, so they're not importing a ton of oil now. And if you look at what China has bought in this last year, they could actually become an oil exporter because of their offshore, everything they've bought around the world. I think it was in about 8 years or so.
That's a massive change.
It's a massive change. Yes.
Shafik, tomorrow, new home sales in the U.S. also, which spark markets one way or another. What are you expecting there, and what else are you watching?
Yeah, that's a big one. You know, this is going to be a pretty exciting week, in my opinion. Like, new home sales, are hoping for 380,000 new home sales annualized, and if it's a number below that, we saw the Dow go down 200 points a day. This could be pretty detrimental. And on top of that, you got the Federal Reserve Minister Ben Bernanke giving his testimony, his speech to the Senate tomorrow. You'll see a lot of coverage on that. Also, Friday's economic numbers in Canada domestically, we're looking at the GDP numbers are out, and we're looking at 1% annualized growth. Is better than the recession, but it doesn't look like that much growth. So we're keeping an eye on that pretty closely.
March 1st is the deadline for 2012 RSP contributions, and a Harris Decima poll just out for CIBC today shows 34% of Albertans still plan to pony up. 13% have not kicked anything in yet. 19% have made a partial contribution. Todd, are these statistics just out today meaningful at all?
Well, I think they're indicative of, I guess, the perspective that Albertans are taking with their retirement. And you do see a difference. Some people aren't taking it seriously at all. Other people, of course, are. But I think the bigger picture here is maybe Albertans are looking at other ways to save for retirement. If they are, maybe they're looking at more tax-free savings account. Maybe they're looking at other kinds of ways of doing it rather than just RRSPs. But I think these kind of reports are always good to remind people that however you're doing it, we do need to be putting money aside for when we retire.
There may be a link here into our next topic, the latest issue of Forbes magazine discussing childhood money experiences. Apparently, a Visa app in the U.S. indicates that the Tooth Fairy may be much more generous in lower-income households. Kids in higher-income households getting less money. Jane, do parents realize and carry forward from children's childhood into adulthood the examples that they set, whether it's with the Tooth Fairy, whether it's day-to-day management of money?
I think I would come back to Todd and say, yes, some people get it. Some people understand that when you are giving your children money, whether it's allowance or Tooth Fairy, that you're helping them to learn. You also have to help them to figure out what to do with it, how to save for spending, short-term, long-term. But there's other people out there who've never been taught themselves, so therefore they're not in a good position to teach their children. And there's some that just go, well, they're too young. So you're going to have some of every sort. I would just, from a personal side, go, the Tooth Fairy, like everything else, does not have to keep up with your buddy.
Right. Don't make her keep up with the Joneses. And Shafik, if you have a Tooth Fairy in your house or not, the RSP contribution deadline is the same for us grown-ups, March 1st. You see people in all kinds of stress this week deciding what to do, maybe just not doing anything. There's the childhood learning with money, and now as adults, often still learning. What do you see this week, and what's your advice?
You know, I think there's going to be a mad rush, just like in high school and university. We did our homework the day before the exam, and I think you're going to see that. You know, the challenging thing is you can, a lot of financial advisors just say, you know, do it contribute to your RSPs, dollar cost average, do it monthly. But the average investor, if they've heard it before, it comes in one year and goes out the other, and it's hard to make change, and change has to be emotional. So people have to really address what their life is going to look like if they don't. And you're going to go through two types of pain: the pain of either effort or the pain of regret. And I think I would encourage people to max out their RSPs.
Perhaps it's that first step of setting up the monthly installments that's the toughest. Thank you all for your insights tonight. Jane Alma is a senior investment advisor with Angus Watt Advisory and National Bank Financial. Shafik Hirani, director at Investors Group Calgary, and Todd Hirsch, a senior economist at ATB Financial.